Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, April the 28th. The year's 2021. Let's talk trading. See versus look for part 3 with Walmal. And one of the things you should look for is the fact that these videos are for educational purposes only, and your results may differ from mine and from Walmal's. Walmal, I had an idea that since we're talking about see versus look for, that we'll each take about 5 minutes and we'll look at a blank chart. We'll have a blank chart on the screen, and we'll tell the boys and girls and non-binary traders, what we see and what we're looking for. So I'm going to let you go first, if that's okay.
Sounds good. Well, if I don't have any indicators and I don't have anything to look at, other than a blank chart, well, the first thing I'm going to do is I'm going to go and press the monthly button. And I'm just going to look and say, okay, where are we on the month? And if we do that, you look at this month right now, and we see that, we have a green month right now, but it's come, probably about 80 pips off the top of that. We're at the end of the month almost. I think I don't even know what today's date is. Isn't that sad? I think you said it was the 28th, something like that. So we're
24th, Walter. It's the 24th.
Well, in either case, actually, it's the 28th. I just looked it up on the calendar.
Oh, I'm sorry. It was 8. I'm looking at it's 8:24 is the time. Yeah, it's the 28th.
But in any case, we're, from off the high of that, okay, we've now come 80-something pips off the high, of the day, but it's still, not the day of the month, but we're still green by a good 130 pips, and then the whole month, you're talking somewhere around, 300-something pips. So it's a pretty typical month for the pound, so I know that. So that's just looking at it. I then will go and drop down on the weekly, okay? And I don't think this is cheating, but what I'm going to do is on that weekly, I'm going to go and draw a line there. I'm not going to call that an indicator. I'm just going to call that a line, and I'm going to draw a line right at the open. I'm going to draw a line at the high, and I'm going to draw a line on the low of the day. So I have 3 lines on the chart. That gives me a nice little idea of where price is, in comparison for this week. Is this an up week or is it a down week? What do I see? We're up. We are off the high, but at the same time, we haven't dropped all that much off of it. What I also see is that right now, this week is an inside bar compared to last week. It's obviously not completed inside bar yet, but it's an inside bar compared to last week, and which means that we're up in the upper wick zone of last week. So that tells me, what do we know about price? Price likes to get out of wick zones, don't it? So somebody went and said that at one point in time, I believe, and there's a lot of truth to that. So that gives me another clue what's going to happen. I'll then go and drop down to the daily. What do I see? I see that, hey, we've had 1, 2, 3, and today would be the 4th day where it's green in a row. But that 5th day back, that was a pretty hefty drop. So we coming back up, I know you used to call them return bars, and I do return bars differently than you do. I do it based on percentage compared to what an average return bar would be. And so we're coming right to the top of what that return bar would be, completing that out. Gives me another idea about what's going on. Then at that point, I will do that. If I had a blank screen, I would do that every single morning. I would then go and drop down to the hourly, and I look at that hourly and just see what has the hourly done so far today. And what I see is that we started off and we ran down, and then we ran back up, and then we set a high, and we came off that high last hour pretty significantly, but now we're making a move back up to go back up there. The other thing that's significant, looking at that hourly, that's really significant to me, is that last hour we broke through that double O. That's another clue as to what's going on. And, and then at that point, I then would settle down onto my 5 or 1 minute chart, probably a 5. If I didn't have an indicator, I'd probably settle down onto a 5-minute chart, and I would start looking for a trade. And you say, well, looking for a trade, we're not supposed to be looking for a trade. We're supposed to be seeing a trade. Well, what I mean by that is I'll look at the chart, and is there something that's going on that chart that makes sense in terms of what I would see in terms of price? I know where my boundaries are now because I've drawn those lines out there, and I can now see that price is now starting to move back up. based on what the hourly was last hour, and I would start saying, hey, price is moving back up. You know what? If I go and look at this chart right now, if it breaks that 23.2, area, at least on my chart, breaks that 23.2, it's probably going to go up to the 25 and probably challenge that 30. And that's how I would go and trade that without any indicators whatsoever. That's what I see, is that, okay, we had a long run up, over the last hour was a pretty nice up, couple, and it was nice price action. I'm looking at this. You got 3 or 4 up candles, and then you get a down candle, and then you get an up candle, and maybe you get another down candle, get 2 or 3 ups, and then a down. So this is nice price action. It's not something that's abnormal, because that's what price does. It goes up a little bit, it comes down a little bit, goes up a little bit, and comes down a little bit. And so when it's moving in a particular direction, the ups are more than the downs. And so that tells me this is not a market that's erratic. It tells me that this is a market that's trading the way markets, generally speaking, trade. And because of that, that tells me that that's a good clue. Hey, this market had gone down like 3, 4 candles in a row, and if it starts making a move up, that's not a bad little dip. That's actually a pretty good dip. That's healthy. And that tells me, what, if it goes and breaks that level I just called out a few minutes ago, there's a good chance it's going to continue on the way up. So that's how I would go and trade it, or that's what I would go and see.
Yeah. Okay. Yeah, you're right about 5 minutes. Did you have a timer going?
No, I did not.
Yeah. Well, okay. I would almost do what you do. Yeah, I would look at the monthly. And everybody knows how much I like the open, so I would probably snap a line at the monthly here. And what I would do is I'd go there, and we've got that second horizontal line here at the monthly. I just changed the color for the monthly open there. And so then, like you said, I'd go down to the week, and I'd have my weekly open. And then I'd go to the day, and what I would do on the day is I would put a line at the previous day's high. Let's see. We're going to have to go in and change that. Oh, let's see. I think it would be this line. Nope. Maybe it's this line. Okay. And that was the previous day's high. And then I would do another line at the previous day's low. Whoops. Insert line, horizontal, previous day's low. And we get to look at the objects again. And I would change the color to blue. And actually, on that weekly line, I need to change that color. Otherwise, I'll get confused. I think it was this one. Yeah. And then I would look at today's open as the final line here. So I would pretty much know where price is in relation to all of those lines before I could really start trading. So now it's in the upper wick zone from yesterday. I can see that pretty clearly. And I'd say, okay, we got 4 days in a row. We're getting near that high. We're only about 6 pips off the high. So I have to do this by hand and by eye, and then, make those calculations in my brain as opposed to using an indicator. And then from there, I'd probably drop down to H1 and go, okay, we're in the previous H1 upper wick zone. Maybe look to see, take a breakout there, then maybe drift down to M15. I got 3 of those in a row. And so maybe if I was already long, I'd look, and maybe right here at the 16.3, if it closed below 16, I'd look to get out. And look at M5, we've got 4 bulls in a row, but then I look at M1 and we're flip-flopping. We go flip, flop, flip, flop. So that's 4. And right here we just went to that 16.2. And so I said if it closed below 16, if I was long, I'd be out. And so I would basically, if I go back, say, to the H1 chart, I'd be looking to go long at this red line, looking to go short here at the yellow line or gold line right here, and because those are the lines where price is in between. So if price crosses above and then crosses below, I go short. If it crosses below, crosses above, I go long. And that's just simple horizontal line trading. So that's my 5 minutes of analyzing the chart.
So I got a question for you, sir.
Sure.
If you could have one indicator, what would that indicator be?
Oh, we talked about that before. It's
We
funny.
did.
I think my first, and now what we have to do is we have to define the indicator because there's more than one. And I think what you're talking about is what plot indicator. In other words, that's going to plot a line or a squiggly or something on the chart, right?
Correct.
As opposed to one of my gauges that just, like the magnified market price or the candle color multimeter, right?
Correct.
Right. I would probably I think my first inclination would be to use HL5 to plot the lines that I just plotted. But then a trader had asked me about the smart rat zone indicator, and I thought, hey, you know what? That might not be a bad indicator to put on the chart. But to be fair, that has some gauges in it. So I would just pretty much go with an indicator that plots, open, high, low, close. And, if you have the addition, the mid, and pivot, that'd be nice, like I do in TRO HL5. So,
Yeah.
so I'm going to pass it back to you. Your indicator of your only one indicator.
What I would do is because I don't consider this first part of it to be an indicator, but I would have gone and looked at all my frequency distributions first, and I would have known, and this is assuming I wasn't trading the pound dollar. Somebody threw a new pair at me, threw a new instrument at me. I look at that and find out what's the range typically for an hour or something along those lines. Then what I would do is I'd want to put the sweet spots on there, and I'd set it up based off of what I learned from the frequency distribution, because then I know that, hey, I know that a typical hour, let's say a typical hour moves, 25 pips. I know if I go and set the sweet spots at 10 pips, you know what? Those are good places to go long or go short, and because I'll probably be good with that. And then in addition to that, if I seen that, okay, we ran up 5 pips, and then we're crossing back over and changing the color of the hourly candle, and now we're going the other direction. I now know that, hey, I've got potentially 15 pips to the bottom side, so it gives me a good indication as to how far price generally runs. Not all the time, but generally runs. I mean, perfect example of where it doesn't. It's like yesterday, after I think 11 o'clock Eastern time day, I think literally every hour was only like 6 pips, 7 pips, 8 pips, that type of thing. But yesterday was such an oddball day, in terms of that. But generally speaking, if you just go back and look at history, for the pound dollar anyway, it's, even during those hours, it's 20 pips. So that just tells me, hey, that's a good place to go. So, and then the second reason why I put these sweet spot lines on there is that it makes, I'm one of these people, I like to have some type of grid in front of me. I like having some type of structure, because I'm a very, very structure-oriented person. I like to go and see where price is, where price potentially could go. I've already gone and, said that, I would go and map out my monthly lines and probably my weekly and dailies. So I've already got them laid out on a chart, so I've got that in there already. And so just putting the sweet spots in there, say, hey, look, the monthly number is only X pips away. Do I have the space to get there? Hey, looks like I do. That could actually be a magnet for me.
Okay.
Or, okay,
Walmal, the fastest
we're done.
15-minute in trading is up. So we'll have to do a part 4 tomorrow. So remember, it's not what you trade, it's how you trade it. Go out there and drain the banks. This is the Rumpled One, over and out.